Wayne, it always seems that I get you on a Friday here when we're having this hot debate. Last time it was London.
It's good to have a hot debate. I mean, the benefits from shale gas is just enormous. I mean, quite frankly, it is enormous. So it is coming, but it's just a question of, you know, it's got to be done responsibly, and you've got to have both parties involved in all of the negotiations and the contracting and all of these things. But shale gas is coming.
And making sure, of course, that regulation is correct.
The whole lot. But it's coming.
You wonder why, I mean, Sasol's pulled out. You know, they've had impairments in their shale gas projects over in Canada and the States.
But they haven't pulled out. I mean, they just bought them at too high a price. What's happened is
But in South Africa, they've said that they don't want to get involved at this point.
Well, they've got to sort out there. There's probably a bigger market for them in America in any case. But shale gas in America is just the most massive thing you've ever come across. I mean, it's transforming the whole energy environment in America. There's so much of it. That's why the prices are so cheap. That's why Sasol had to write down their assets. And so did Billiton, I think. They had to write down the assets because there is just so much gas around. I mean, there's more shale gas in America than what the Middle East has ever had in oil. Ever. I mean, so this in 20 years' time, shale gas is what we'll be talking. We'll be talking about the shale gas price, not the Brent crude price.
Yeah, we're going to have that shale gas price definitely up on the video wall. Sasol's share price, though, 374, Brent crude slipping below 113 rand, stronger today. What are your thoughts on the outlook? Credit Suisse, in fact, cutting their view on the Sasol price today.
No, look, they might be cutting the view, but Sasol at this price, as this current market rating, I think it's a 6 or 7 PE forward. It is actually cheap. So, I mean, I wouldn't worry about the Sasol share price at all at these levels.
And of course, we've had the ECB yesterday.
Yes,
we've had,
big news.
Now it seems that there's, you know, quantitative easing more likely.
I don't think
we're
going to get QE 4, 3, whatever in the US. I really don't think so. The economy is not in that bad a shape to quantify. And of course, printing money doesn't create jobs. Printing money doesn't flow directly into consumption expenditure. It actually goes to support the financial system.
And the thing that will create jobs is businesses using the money that they have on their balance sheet and putting it into investments.
What will create jobs is people spending more money, but they haven't got it because they're paying back debt.
But also investments, you know, from businesses.
But businesses aren't going to invest if people aren't going to buy. Yeah. So the whole thing boils down to the fact is there's just too much debt around, and you're going to have to live with a bad job situation and a fairly mediocre economy for a long time.
And people continue to deleverage in the States.
That's just life. I mean, quantitative easing just injects money into the financial system. If you've got a house that's worth 30% less than the bond on it, you're not going to go and buy a new car. You're just going to sit and say, well, let me pay back my debt, let me pay back the debt. And that is exactly what's happening. And with US bond yields at these incredibly low levels, all extra cash is going to do is drive them even lower. But it doesn't matter. It doesn't actually solve the debt situation in the US.
I mean, let's talk about the debt situation in South Africa in light of all the concerns around unsecured loans.
Yes.
And I mean, we had Capitec disappointing with their earnings update, looking at headline earnings growing between 25 and 35% for the half year to August. And that would compare against the 53% growth in the previous year. So growth is slowing. Yeah. But is that a concern? I mean, 35% growth for a bank?
Look. Everyone, not only is the total market slowing, is every bank, every financial institution is in the unsecured loans head over heels. I mean, they are just their hammer and tongs. So everyone's there. So Capitec hasn't quite got the market, you know, almost not quite to themselves, but they haven't got the market to themselves anymore. So everyone's into this. But of course, these have been growing at phenomenal rates, and the growth rate just by definition has got to slow down. And when it comes to the shares, they're probably still anticipating the very high growth rates. That's why we've seen the shares come off. I mean, Able has come off seriously, and Capitec maybe not quite as much as Able, but the share price has also come down.
Good buying opportunity?
No. I think the good years are behind us. Yeah, there's no problem until rates go up. So you're not going to see, you know, big bad debt write-offs, etc., at these very low interest rate levels. But when rates go up, which they will, then you're going to see the unwinding of these unsecured loans.
Well,
but for everyone,
certainly questions for the CEOs. But in the meantime, next week, in the shorter term, you know, the likes of Billiton up 2.4% today. Anglo-American almost 250 rand, 6% rally in Anglo-American. The stocks that have been hard hit up today. What's the outlook for resources next week?
It's very simple. it's just reversing what's been happening the whole of the year. This year so far, the industrials have gone up and the mining's gone down. Now today it's reversed. Whether this lasts or not, I mean, who knows? It actually still depends on China. It doesn't really depend on what the European Union is doing. This might be today's rally, and we might see the rand strengthening on that news. But at the end of the day, China has got to stabilize and start to show not the growth rates of old, but at least stabilize their growth rates at 7 or 8%. That will be the driver for resource shares. This is just almost, you can say, the shares have fallen too much, so it's a bit of a relief rally.
Yeah.
Nothing fundamentally has changed in their outlook. Exactly the same as what everyone's moaning about in the US. Buying Portuguese and Spanish bonds doesn't create jobs. It doesn't put money in people's pockets. So it's not as though all of a sudden the European Union's economy is going to rebound, which will mean more demand for resources, which means our resource shares go up. So nothing fundamentally has changed in their outlook, and we wait for China. That is still the big one.
Yep, it's always about that Chinese data, so we'll hopefully get some indications from them soon. Wayne McCurry, thank you so much for joining us. Wayne McCurry from Momentum Investment.